Good afternoon. This is Chris Brecher with a Simpler Stocks free video for June 23rd, 2016. So you can see it's about 13 minutes after the bell. Just finished doing a special 1 hour about correlations. If you look on here on our website, I did understanding correlations in the market. And today we were talking from 3 to 4. You have to understand it's not one of these dry things where I go on a rant or a speech for an hour. We talk about how it relates to what's going on today, like how you can make money today. If you're a $7 trial member, you get all these recordings. And then if you look in here under Meetup, everyone under here goes on to a video that as long as you're a subscriber, you can get all of those for free. So the thing we did today was free for members. And we were talking about the correlations between gold and the dollar, about like crude oil versus Exxon. Is Exxon influenced more by crude oil, or is it influenced more by bonds because Exxon's such a high dividend stock? You know, what were traders keen off of today? Were they keen off of volatility? Were they keen off of bonds? And so on. And I was showing all how to show correlations. I was also showing option correlations. And I was showing that if certain options move, it can affect the stocks. If you get a chance to sign up, it was really a good one. Now, the best thing about what we were talking about today, I think, is I was on the floor for 8 years. And then I worked for a day trading firm for 9 years after that. And I started, my whole business started by me being at one of the schlock penny stock firms in 1980. And the whole idea is I saw it all. So I actually, at the end of after the market closed, I went into some trader stories that everybody seemed to love. So, I mean, the more bizarre the story, I'm telling you, there's a lot of stories that were funny. Some of them were a little bizarre, and some of them are horrifying. But, you know, I can share 1 million of them. So if you're on the chat or in these things, we can, after the close, when all of a sudden we don't have to jump on anything, I'm happy to go over them. I love going over the stories. You know, I was proud to be on the floor and I love going over things. So just so you know what we had today, you had the market up down $3, 3.25 on the ESs. You had the NASDAQ down 4.5 and the Russell down 5. You had bonds unchanged. Gold down 290, crude oil down a little. Transport's down 49, really led by Federal Express being down. Also the correlation, and we were talking about this, that when crude oil goes down, the transports go down now. It's not like they go up like the airlines go nuts. What happens in this, when crude oil goes down, the stocks like the rails go down because it means the coal goes down. And that's just the way it seems to work. VIX way up 269. We saw it all day. And Nikkei down 175. You had the dollar down modestly. And you had wheat and all them doing really nothing. Now, the whole idea on here, and this is what I was trying to explain before, is the VIX. Now, what do I mean about the VIX being up 2.69? We have Brexit coming up. People are nervous about Brexit. Now, the first thing you should know about here is there are two things to look at. If you were trading the SPX today, the first thing you're going to notice is this. I hope everybody can see this. I'm going to take off the futures. When you watch the VIX starting to go up and you see a bear flag after the SPX goes under its ATR stop, you short the tar out of the market. Now, I was showing for example purposes when I was on simpler options and simpler stocks that if you see a bear flag like that and you have Wednesday expirations now in the SPX, you go and you pound some out of the money calls and you just sell them. I sold the 2100 and the 2095 calls and they work fine. The whole idea is when you see this kind of perfect storm, you can see the writing on the wall. Next thing you're going to notice in here is check out something like Goldman Sachs. Now, I know the stock was down 21 cents. That sounds like not a big deal. But the volatility exploded. See this? I go on the straddle. Now, you could use this expected move. But see that $5 expected move? Usually with a day and a half to go, 2 days to go, this expected move is about 3. So it's about 50% higher than normal. One is their stress test tomorrow by the Fed. And then obviously you have Brexit, where the results will be late tomorrow night. So what I was watching, it was very interesting to watch, and I'm going to try to show you in here. Here's Goldman Sachs on the left. I'm going to put it on a 2-minute chart. Now what I'm going to do is I'm going to go into the 145 puts, and I'm going to copy it. And then I'm going to put in here, I don't know if this is going to work. This is live TV here. That's what I want you to see. I'm hoping this will work in here. Let me remove all studies. And that's what I know that doesn't look like a lot, but this is what I want you to see. Put this in here and reduce it in here on the left. Do you see on how Goldman Sachs rallied right here? And the puts kept going up. So actually Goldman Sachs opened here and sold off, and the puts went straight up even with the rally in Goldman Sachs the last hour. These little blips, the options would not go down. That means volatility went up. To give you an idea, here's one that we were actually doing in the room. See MetLife, yesterday they did unusual options. Now to show you what I mean by that is if you go to home on simpler stocks. Now I don't publish option ideas all the time. The ones I publish usually work. And one of them I showed him was this. Let me put it back in here. Is I was showing the late day Met put buyers. And this is from yesterday in here. And the whole idea on this is this. Big old put buyers in here. Then what you do is you go to today. And what you do in there is you go in here. And go into Met, same thing. But this time we're going to put in these puts. So I'm going to copy. And then what you're going to do is go to charts. And you're going to go to Control V. This is really interesting. When you saw Met earlier this morning going up, the puts were going up. The puts refused to go down. In fact, the stock right here at 11 o'clock was up 22 cents for the day. The puts were up from the day yesterday. And they just slowly kept going up, and the stock then slowly started going down. That's what I mean about volatility going up in the overall market. Yeah, I saw it with a lot of the stocks like the MetLifes and the Goldman Sachs. Google's expected move went from $11 to $16, and it did that in the last 3 hours. So there are a lot of people worried about Brexit. Those are things we're going to talk about in the premium video and in the chat tomorrow. So I hope you've enjoyed this video. I will be on tomorrow from 9 to 10 live. And if you get a chance, try to sign up for the $7 trial. A lot of people this week they told me they've made the last 10 months of their subscription just with 1 or 2 trades. So everybody take care. I will talk to you tomorrow.